Hi, my name is Scott Schreier, and I am an equity research analyst here at Citi. I'm here to talk about my thoughts on stock selection and some of the key factors to consider when making an investment. First, I think it's important to consider both a top-down approach as well as a fundamental bottoms-up analysis when performing your investment analysis. An understanding of basic economics and what some of the broader macro drivers and economic releases is a good way to gauge overall market conditions for both investor sentiment and also getting views on where a particular sector may be poised for growth. And for me personally, coming from a bit of a science and engineering background, I like the fact that there's just so much economic data available for us to analyze. Now, that's not to say that every analysis has to be highly complex and mathematical. In fact, in many cases, it can be simple as making a chart to observe trends and then thinking, well, I wonder how this chart compares with another data set, and then we can start to see the relationships. Also, interesting ways to look for investment ideas could be through a thematic approach. For example, as most of you see with technology and how fast it advances and changes our lives, there can be various themes to investigate. Or, what sounds far less interesting than high tech, but's relevant for the stocks I follow, was last year's passage of a multi-year highway bill which makes for thematic investing. People can say, okay, we are rebuilding roads and highways and bridges. Well, who benefits for that? And then to think about it a bit more, who might indirectly benefit from this theme? And now maybe we can find companies that are not quite as well known to have indirect exposure, and these companies may start to beat estimates and bring further attention to them. Or another relevant example of thematic investing when oil prices crashed in late 2014. Well, of course, energy stocks crumbled, but it gives way to a theme. Well, who benefits from lower oil prices? And that can be a number of sectors and stocks. I stress that in many cases, top-down analysis are important because bottoms-up forecasting and modeling for companies is great, but if the macro environment isn't supportive, many times analyst forecasts get revised downwards, which can typically, 1, lower the valuation of a company based on the lower denominator, and 2, multiples overall in a sector will compress, and then you have a perfect storm of factors that are preventing a stock from working. Conversely, when the macroeconomic environment is supportive of a particular sector and that information becomes widely known, investor interest in the sector surges, and then we have multiple expansion, and now you have a framework to dig into the particular stocks. When I analyze individual stocks and model companies, some of the important things I look for and start to question is, how are this company's margins relative to peers? What are the barriers to entry for the industry? Can the company gain traction in either pricing power or gaining market share? How is the company leveraged? What is the company's capital allocation strategy? Are they returning capital to shareholders? Are they a consolidator looking for continuous M&A opportunities? Or are they investing capital back into the company in the form of advanced manufacturing initiatives? When I analyze the financials, where do I think other people are missing something that may cause the stock to outperform if my assumptions are indeed correct? Lastly, I think taking a good look at management and the company's operating history is crucial. So to summarize, I think there are 3 important factors to selecting an investment. 1, thorough economic analysis. 2, thematic exposure. And 3, rigorous fundamental financial analysis.